Hey everybody, welcome back to the channel. Today we are talking about divergence trading, and this is a really fun topic for a lot of traders. They really love to talk about divergence because it is a very interesting signal or trading setup that does not happen all the time in markets, but it actually can produce some really great trade setups. So in this video, I'm going to talk all about divergence and talk about some ways to find it as well as some ways to potentially trade it. So stay tuned. Let's go ahead and get into it right now. Hey everybody, welcome back to the channel. My name is Nick. I talk all about trading and investing here on YouTube. Thanks so much for tuning into the video. If you do like my videos, do me a favor and subscribe to the channel so that you get more content for free. And make sure to hit that like button if you do enjoy the content. It shows me which videos are the ones you guys want to see more of. So today we're talking about divergence and trading with divergence, which is a really, as I mentioned, interesting topic. Now I want to start by taking a look here at this little chart here. Now this is, I found this on the internet. This is the divergence cheat sheet. If you'd like to pause the video and take a look at it, feel free to come back at any time. But what we're going to do today is we're going to focus mostly on this first concept, this regular divergence. Now, if you guys want to see a video on hidden divergence or you want to see a video on exaggerated divergence, then do me a favor, comment down below that you want to see those videos, and maybe I'll make a follow-up video on these two concepts. So again, we're going to focus for the first video here, though, on regular divergence. Now, this concept of divergence, what is it and how do we trade it? Well, first of all, divergence basically is this idea that using a simple oscillator like the RSI, the relative strength index, which basically measures the strength or momentum of a market, we can look for potential signs that a trend or strength may be weakening, though the price has not yet weakened. What I mean weakened, basically if price is moving up and the momentum is showing a slow to the downside, that could mean that a reversal is around the corner. So basically using RSI, using divergence is a way to look for reversal type setups in the market. Now this is applicable to stocks, currencies, Bitcoin, whatever you're trading. This concept is universally basically just a price action based concept where we are looking for a market to tell us that it is weakening in momentum and for the price to kind of not yet be reflecting that. So let's take a look at this first example. If we were looking at bearish divergence, right, what we are saying here, this is bearish regular divergence based on the chart. And this idea is that, okay, the price is actually still making the key note here, which is higher highs, okay? Based on a basic trend following concept, higher highs mean it is trending up and lower lows mean it is trending down. Well, in this example, you can see we have a market that is trending up. So this blue line is the actual price. The red line here, however, is the oscillator. In this case, we're going to be using relative strength index or the RSI. So with the RSI, we have lower highs being formed, which kind of contradicts what the actual price is saying. And that is why it is called divergence. Notice this black line here, one is going up and one is going down. The concept here with divergence is that these two lines are disagreeing with one another, and the idea is that it is expected that potentially we have a reversal coming in the near future. Now, divergence, one of the biggest weaknesses, I'll pause right here, is that it does not necessarily tell you exactly when a market is going to correct or even turn around. It tells us that a potential reversal may be coming sometime in the future. And that really is one of the limitations that just trading divergence by itself can be tricky. So stay tuned. We'll talk about some ways to combine it with other concepts to look for setups and actually build a trading entry and exit plan. So stay tuned further into the video for that. So let's just flip the script really quick. We'll get familiar with bullish divergence. In this case, we are taking a situation in which we are looking for a potential bullish signal for the market to move back higher, and we're looking for a market that has a series of lower lows. So in this case, we're looking at a bearish market environment. And we're looking to see that we have, a bullish divergence setup, which is basically the RSI starting to print higher lows. So the market is printing lower lows, it's moving lower, and the RSI is actually printing higher lows, showing that, momentum to the downside is weakening and in fact starting to build up the other direction. Okay, so these are those concepts on paper. Let's actually go take a look at some examples, and hopefully that will help us get more familiar with some actual, visuals to look for before. So I'm actually going to start with this one because this one is a really clean example that makes a lot of sense, even to those of you who are a little bit more new to trading or more new to this concept of divergence trading. We're going to take a look at this example. So if we remember, let's look just for a recap at the bullish divergence setup that we just talked about. Lower lows in a market and higher lows on the RSI. So let's jump back over to the chart, and we've got our RSI down here, right? Which just goes from 0 to 100, just telling us the overall strength of a market. Over 70 is considered overbought, and under 30 is considered oversold. So when we have a market here that is trending to the downside, remember, we're going to be looking for a potential reversal setup saying, hey, it's probably ready to go the other way. So we're looking for bullish divergence. Well, let's remember from our thing that we just looked at what bullish divergence looks like. It means that we have lower lows forming in a market. There's our lower lows. And it means that we have higher lows being formed on our RSI tool at the bottom of the screen, which we can actually see that we have right now. So I'm using tradingview.com. If you're not familiar with it, it's a free tool, super useful for looking for divergence and drawing all your lines and charts. So if you are not using it already, check it out. It's great. It's a completely free tool online. So looking at here, what we see is, again, recap, we have a lower low being formed in the markets, which is considered a bearish trend. However, our RSI is disagreeing with this. You can actually see our RSI is printing higher lows, telling us that, hey, the market is slowing down on the downside. It's losing momentum going down and may actually be ready for a reversal. And then we can actually see shortly after what actually ended up happening was we got a clean reversal, right? Price not only, barely took any pauses before continuing strongly to the upside. So with that said, we do see that in this case, our divergence setup actually worked out. Now, I mentioned at the beginning of the video that this trade setup by itself does not occur that often. It is kind of a rare scenario that we see divergence form in the market, which I think actually adds to some of the value that this sort of situation offers. A lot of times traders think that they need to be trading all day long in and out of the market constantly. However, some of the best traders that I know focus mostly on quality over quantity. They're not looking to take a huge volume of trades. They're looking to take high quality trade setups, get in the market, take little risk, and get out for as much potential profit as possible. So when we look at a situation like this to me is a rare scenario that calls a pretty great reversal here. Now, of course, no setup is going to work 100% of the time. It just does not exist. If it did, everybody would be doing this and making tons of money, and it wouldn't really make sense, because in order for Forex to make sense or for the stock market to make sense, there needs to be winners and losers. So this setup by itself is not going to print you the holy grail. It's not going to print you $1 million really quickly and really easily. However, it can be used as a signal or a potential idea that, hey, we might have reversals incoming. So how do we actually take it one step further and enter and exit with a proper setup that makes sense? Let's talk about it. So we don't want to throw out everything else we know. I still like using technical analysis, using sentiment analysis, and using fundamental analysis to build a trading theory or trading idea in the markets. And going off of our technical analysis, that adds on our RSI divergence. So let's take a look at this real quick. Let's talk about what we still see here on this market. We do see a downtrend here. We see levels of support and resistance here. For example, this zone right here. Right. We also have, a kind of consolidation zone here, and we even have support in this general area. If I could get my pen to work here, right? We have support here at the bottom. We had, basically what we see, our RSI is telling us that, again, we have a potential bullish reversal coming, but our other technicals are still somewhat important to consider, right? So for example, using just this trend line, for example, if we were to use an RSI divergence plus a trend line breakout, that could be a decent setup by itself. What do I mean by that? Well, of course, we're working in hindsight. We already know that this signal worked out pretty well, but just for the sake of demonstration, let's say that we looked for the trend line here to break pretty decisively before getting in. So in this case, maybe we say, okay, let's take a buy trade here because we're closing above this trend line here that we have spotted in this market, right? So if we have our trend line here printed on the chart and we say, hey, I'm going to buy this because it's showing divergence. It looks like price wants to break through this trend line and I want to go long. Well, let's say that you put a stop underneath structure here and you actually put a target at something like a 2 to 1. Well, in this case, that actually worked out really, really nice. And all we did was use a slow in momentum and a break of downward strength to get into the market. And that's all we used in this case. Now, of course, there's all other sort of analysis that a trader can do. You can use fundamentals, you can use sentiment, and you can use technicals. And so for me, looking at this trade, I probably wouldn't just take a trade just off of this. I'd probably be, hey, am I actually long biased on dollar yen, and adding my other factors, my other confluence factors to my trade. But the pure idea here of a slow and momentum is a trade signal that I really, really like and think has a lot of potential in some of these markets where you're looking for, hey, we have this downtrend, but let's look for some signs of weakness before trying to jump in. Again, a lot of times what people do is they try and jump into the market as soon as it seems like it's too low or too high, and they don't wait for any sort of signal that the market may be ready to reverse. In this case, we are actually waiting. We're patiently looking for setups in which the market looks like it is starting to reverse in order to jump in on that and add some potential better setups to our trading. I hope this is helpful to you guys. Thanks so much for watching. Again, if you want to see the rest of these other types of divergence, make sure to comment down below and like the video. Thank you so much for watching. I hope you have a great rest of your day. We'll see you back in the next one.